Michael, Natasha, welcome.
Thank you for having me.
No worries. So
Thank you for having me too.
we can't get rid of you, unfortunately. So a bit of background: Natasha is our broker, and we regularly use Natasha, and so do our clients. Tash, tell us a little bit about yourself.
I love the statement that I'm your broker. It just makes me feel really important.
One of many.
Oh.
Let's take it back to the just me.
Okay.
Much better. But yeah, so my name's Tash. We work together. I'm a client of yours. My clients are clients of yours, and vice versa. So it's a happy little family. But a little bit about me. I'll just move this because I think it sounds better that way.
No worries.
Yeah. So I've been in the industry for 9 years. I just hit my 9 years this week.
Sorry to hear.
It's been the best 9 years of my life. But yeah, so the 9 years actually, I was in one of the major four banks.
Yeah.
Various roles, but predominantly lending focused.
Yeah.
And I've recently decided to branch out on my own and open my own brokerage, which is super duper exciting.
How's that going?
Really, really well. Yeah. In the past month, I've probably done triple the amount that I would have done at the bank.
No need to brag, but yes, nice.
The only reason for that is because banks are very restrictive to who they want to lend to. So they'll fit people into a box, but not everybody fits into a box, right? Yeah. So when it comes to brokerage and having 32 different lenders on my panel, there's always somewhere for a client to go.
And that's why we use brokers. That's why we recommend
Yes,
brokers.
this is why we
play
recommend
the banks
brokers.
against each other, as it's it's all a game of lending, isn't it?
Absolutely. Yeah.
Now, Tash, tell us. Now, you said that you came from one of the big four. We won't mention names because we don't want to get
The good one,
served
if there is a good one.
with legal letters. What are some of the things that you saw or you dealt with when you were working with one of those big banks that I guess they don't want us common folk to know, or they try and hide from us? Do you have any
Inside secrets.
Inside goss? All about the goss here.
Look, I think there's a lot of things that I'm going to say which might be controversial.
Let's go.
Gotta get the views up.
Let's go.
People might not believe me, but it's all facts at the end of the day. The last 50 years, banks have been gimmicking certain products that just don't work.
Really?
Yeah.
Tell us more.
Yeah. So everyday offsets don't work.
Fuck. I'm fucked.
They don't work.
That's an edit, George. That's an edit right now.
Credit cards as part of your home loan annual package keep you broke.
Yep.
Making monthly repayments keep you broke. Making your minimum repayments on your home loan for 30 years keep you broke.
Really?
So, yeah. So I can explain what I mean by this, but
Yeah. Give me an example.
How do you feel about
Give
what I'm
us-
saying so far?
I hate
I
the
wanna hear
the
more.
banks. Now I already hated them, but now I hate them more.
It's a system. It's a system to keep the poor and the middle class down. You're on a hamster wheel, trying to pay your home off for 30 years. That's all it is. You're in a cycle. They keep you in a cycle. They keep you working. You're a modern day slave, essentially.
100%.
So we want to know more about this.
We want to help our
wanna know
people.
So give us some.
All right, so we'll start with making the minimum repayments on a home loan, right? Everyone brags about how cheap their minimum repayments are, right? So you might be with CommBank, you might be with Westpac, your rate might be slightly lower, so your repayments are going to be less by $50 a week, and you'll brag at the barbecue saying, yeah, well, my minimum repayments are only $750.
I've got a barbecue on Saturday. I was going to brag.
Yeah.
But now I won't.
And his minimum repayments are $800, and you're
Yeah.
like, oh, well, that's no good. I should move to your bank. But if you make your minimum repayments and your loan is $550 over 30 years, you're actually paying back over $1.1 million. Opposed to using a redraw instead of an offset, chucking in as much extra as you possibly can on top of your minimum repayments and going, well, I've chucked in 10 grand this month and now I'm 8 grand ahead.
Gotcha.
Do you know what I mean?
Yeah.
So
that's-
redraw over offset.
110%.
Wow.
Offsets only work if the money stays in it.
And it doesn't, does it?
Doesn't, does it?
There's always something to pay for.
Let's be honest. So I'll chuck a bit of a scenario at you, right? Say you've got your current setup is your home loan. You've got your money where your bank account where your salary goes in, and you got your offset. You got $5,000 in your offset. You got $50 in your bank account. It's Friday. You're getting paid Monday. Now you're going out for some drinks with the boys at the pub, and the boys are shouting rounds.
The boys.
Boys are shouting
This
rounds.
story.
And you want to shout around because everyone's shouted you around, but you got $50.
Not Michael.
Not Michael. He's
Slow
too
down.
tight.
We're not
But Jordan will shout. I know Jordan will shout.
Yep.
So there's $50 in your account and you want to shout the boys around. The round's going to cost you $100. So you're getting paid on Monday.
Yeah.
You log into your net bank. You've got $5,000 in your offset. What do? Do you shout the boys?
If you've had a few drinks, you're probably going to take money out
I
of the
think
offset.
we're going to spend more than $50 if I got $5,000 in an offset. Yeah.
You're going to shout
yeah.
the boys, yeah?
Yeah, and then some.
And you're going to keep going.
We're not. Yeah, we could keep going. It's Sunday turns into Wednesday.
And who knows what else you might buy at the end of the night, right? Yeah. Then it's not $100, it's $500 you've spent, right? So that doesn't work because the money's going out of your offset. So you're not offsetting that $500.
Yeah.
On the offhand, let's say there's no offset account.
Yeah.
There's just your home loan and where you get paid.
Yeah.
And in your home loan, you've got $5,000 in your redraw.
Yeah.
You got $50 in your savings account. Are you going to pull out that $100 from your redraw? Are you going to increase your home loan to shout the boys around?
You wouldn't.
You're not.
You know.
Why would you increase your home
But that
loan
makes
to
so
shout
much
the boys
sense.
around?
That makes so much sense.
It's a different
You're
mindset.
going home.
It's a different mindset, isn't it, at that
It is.
point?
Wow, that makes so much sense.
Yeah, it's all about the psychology of it.
Yeah.
Wow. Okay, what was the other one? There was like two other ones I remember you said at the start.
So there's offsets, there's minimum repayments, monthly repayments
Monthly.
on your home loan.
Let's go.
So when you set up a home loan for the first time, whether it's refinancing or buying a house, your bank will default you on a monthly repayment.
Yeah.
Now, I always advise my clients never to pay monthly if they can help it. Weekly or fortnightly will make a big difference because you actually end up being charged less interest if you make your repayments more frequently. So your interest is calculated every single day.
Yep.
And it's charged at the end of the month. Now, if you're making a monthly repayment, you're only reducing your balance once in that month.
Correct.
Yep.
So the interest calculated over 30 days.
Is higher when it's charged.
Whereas if you're paying off every week, you're taking it down. And so every
Four times in
time,
the month.
4 times in the month, you're
Yeah.
paying less interest.
Yeah. So over the 30 years of your loan, just by doing that, you can chop it down to 29 years or 28 and a half years just by doing that.
So a year and a half potentially.
It's more
Yeah.
money in your pocket, less in the banks.
100%.
It makes sense.
Now, if you add on top no offset and
Yeah.
you're putting in extra on top of your minimum repayments, let me tell you, I've done a calculation before I came in today, okay?
You were prepared, unlike
was.
other guests we have.
Yeah. This is what I advise my clients every day. We were mentioning earlier one of my idols is Graham Holm.
Yep.
His biggest
Shout out to Graham.
hashtag is FTB,
Yeah,
fuck the
yeah.
banks.
Fuck 'em.
So I advise this to all of my clients, don't make your minimum repayment. You had the pleasure of meeting Stella and Dominic.
Yes.
So this is something I went through with them. Their loan, say just as an example, this is not specific to them, but a loan of $550,000. Minimum repayment is $750 a week, about $750 a week.
Yep.
So you make that repayment over 30 years, you pay back just over $1.1 million.
Yep.
So you pay $658,000 in interest
Nice.
on top.
Yep.
How good does that make you feel inside?
Absolutely shocking, right?
Feel sick.
You add on top just an extra $150 a week. You save $200,000 on interest, and you pay off your loan in 22 years instead.
Wow. Wow.
See, in theory, it's great, but in practice, there's a lot of people that can't, especially with the current state of living. But the information is there if you're willing to sacrifice
Yeah.
and you're not willing to go out with the boys and you're not willing to go on so many holidays or whatever it may be. And I've done it myself. I've had to sacrifice. I bought my first investment at 22 or 23. It's not to say that I've lived, a poor life, but there's been times when I do want to put money into a renovation and get the equity, or I do want to pay down that loan quicker. So it has to start with changing the mindset of people. And a lot of people in Australia are on good money. And not to harp on the whole avocado on toast thing from a few years ago, but there is options there to, eat at home or not go out as much. And I think I'm starting to see that shift in mentality. Like you go out to Sydney on a Friday afternoon or Friday night, there's no one there. People are going home. People are trying to live frugal lives, probably because of what is going on around them. So this is good information that we can pass on. So people that are in this position, I can put an extra $150 a week on. Now I will, because I'm going to save 8 years and 300 grand.
Yeah.
Yeah.
If that's not motivation, then I don't know what is.
I think what you're saying is absolutely prevalent in today's market. The cost of living is just ridiculous. But in saying that, we waste so much money here. We're so privileged, and we want instant gratification for everything that we do.
Correct.
We might have $5 left in our account, but we have to buy that coffee in the morning because we deserve it. Take your lunch to work. That's going to save you $20 a day.
Yes. Agreed. And
Do you know what I mean? That's
people want everything now, the new car and the brand new home.
Yeah.
And it's like our parents' generation, they lived in a 3-bedroom old home, and we made it work. We used to have, a tiny house, and we would have family over all the time, and it was fine.
They
Like,
grew
we
their own vegetables in the backyard.
grew their own vegetables. My mum still got the cot that I slept in 34 years ago.
They sewed their own clothes. They made it work.
Yeah.
Didn't they? They chucked every little bit of extra cash they had onto that home loan, and they paid off those loans.
We live in
no
a
time.
social media world where you have to compete with everyone. And in the end, the slow and steady wins the race. It's not,
No, generations have changed a lot, because we come from, I look at how, I was and how I built my portfolio, and all I do is spend money. That's all I do. And real estate was a way in which I could invest, and it's a forced savings for me.
Yeah, that's a good way of putting it.
You look back at my late grandmother, who was an amazing woman, and she was from that old generation where she would get, $1,000 pension and save $1,200 of it. You know what I mean? She's absolutely amazing.
Under the mattress.
And mate, she'd always, I remember, I was featured on TV and I bought 14 properties in 12 months and everything. And then Bub was like, I seen you on TV. I was watching TV, and because I always watch Channel 9. Anyway.
6 o'clock on the top.
And as I left that day, she slips me 100. She's like, $100. Just take 100. Buy yourself
Reminds me of my
something.
grandmother.
And I'm like, Bubba, I'm doing okay, Bubba just, she's always handing out money, and then we've got some average family members as well, and mate, they're always hitting her up for money. She essentially functions like a bank, and she's on the pension.
It's not Bank of
Think
Mum and
about
Dad.
it.
It's Bank of Bubba.
Bank of Bubba. So no, amazing, and it's funny how that was her generation. It wasn't passed to me. I'm all about spending. All about spending and buying and leveraging and using the banks and understanding the modern slave system, right? And using that to my advantage. Whereas Bubba was just like, no, cash. She would literally walk around with 20, 30 grand, because she didn't even do the under the bed. She just literally did, I'll carry it in my purse. She goes to Woolworths with 20, 30K. This is a whole...
Which Woolworths you going to be at today?
So yeah, just... crazy, but it's amazing how the generations have changed.
You know what it is? It's mobile phones.
You think so?
It's screwed us, yeah.
Really?
Everything's at the touch of our fingers. Online
Sure.
shopping,
Instant
ads on
gratification.
Instagram, instant gratification.
Yeah,
You
the
can't wait.
temptation's there.
Yep.
Tash, question for you. Now we've been working together a little while. What did you know about buyers agents before you sort of met us and got involved with us? Did you have much knowledge? Or
I did.
how have you seen... We're going to say we've improved the industry.
Yeah.
How have you seen the relationship between brokers and buyers agent? Just let the people at home know how that works and why it benefits people that are getting a loan.
It's a good question. Prior to, starting our relationship together, I did majority of the work as what a buyer's agent does for my clients as a broker. So I was doing the research, I was having the spreadsheets, looking at the rental yields, looking at growth, doing all that stuff, which gave me my knowledge on how I've built my portfolio. If I wasn't in lending, I'd 100% be 110%.
You'd make us a little bit better looking.
But it's an industry gap. I think there's not enough relationship between brokers and buyers agents, and we essentially are the bridge to the gap between someone being able to buy a property now or having their pre-approval expire after 3 months.
Because what is it? 3 months, isn't it?
Yeah. And there have been so many times where I've had pre-approvals.
I know where this is going.
Yeah, you do, right? Pre-approvals expire, I'm renewing them. The thing is, our clients are having big issues at the moment in making offers interstate and being successful because there's 50 other people lining up behind them.
That's right.
There is.
Michael, you can touch on that.
She's totally right. And I knew exactly where you're going with the story. I'm struggling as a buyer's agent. I'm telling you now, I've been in this 10 years this year. I've been investing in property, 19 years now. it is not hard to get. It's not easy to get deals. It's super hard, and a lot of people don't realize this. And when you're coming in with no experience, and regardless, people think that they can just buy a house. It's very easy.
You can, once upon a time it was,
but you are going to overpay. So a lot of them are putting in, $700,000 offers on something that's $630,000 just so they can get the deal. And a lot of them get cold feet, which was actually, funnily enough, a phone call that I just had before we got in. So from someone who actually got a cracking deal, and they had the cold feet. So anyway, point of the story is we are seeing that happen so much, and they're struggling with agents. They're struggling to, in multiple offer scenarios, they're getting to the end of their 3 months. And by the time you get to the end of the 3 months, the actual budget that you had set aside for what you wanted to buy.
Wow, you've just lost
gone.
20K,
Gone.
50K.
Gone.
And then
Yeah.
you got to get a new loan, and that's higher interest rates if you're in the last 18
And then
months.
your borrowing capacity goes down and you've got less borrowing capacity. So
There you go.
that's what we've been seeing. I think the biggest struggle for people is not only is there too much competition, but the borrowing capacities are so depleted because of that 13 consecutive rate rises that we've had, that it's a real struggle. But we did have a success story recently where I did have a client who was so eager and keen to get her foot in the door to get into her first investment property.
Did you steal it?
I don't know. We'll have to ask Michael.
You got to think outside the box.
We'll have to ask Michael that. But so she was coming up to the end of her second pre-approval renewal, and I said, you know what? Let me just introduce you to a fantastic buyer's agent. I've just used him myself.
It's me.
Where is he?
Yeah, where is he? Oh, he's not here today.
Yeah, settle down.
But yeah, I think it took you between having the first chat to a week. She had purchased with you her first property, and she just settled
So
recently.
essentially 5 months she was looking on her own.
Yep.
And in the space of a week, she calls Pinnacle, came to the rescue.
Yep.
Now, just to sidetrack a little bit, you also used our services. Good result, bad result, somewhere in the
Terrible
middle.
result.
You got to be
Really
honest with
bad.
the viewers.
No, an amazing result, I have to say. Cracker result. I have to use the word cracker.
We are in
because
Western
we're in
Sydney.
Western
No,
Western
Sydney.
Sydney.
Not at the
Let's
moment,
go.
but close.
Let's go with the cracker.
So the story is, I'm a banker. I know how things work. I also have an investment portfolio and a very good understanding of how to negotiate, where to look, and all that stuff. So I wasn't under the belief that I needed a buyer's agent.
You're not the type of person who has no knowledge. You're actually very good, and I know you'd be very good.
Thank you.
In my role,
I would love to.
100%. So you're the type of person who's actually very qualified. You're already buying properties for your clients, and even you found it difficult.
Yeah.
So I thought, I don't need a buyer's agent. I know everything there is to know, except for this one time when I needed a buyer's agent.
And I nailed it.
3 weeks to go, pre-approval was running out, and I knew because of a change in circumstances, if I was to renew it, I wasn't going to be able to borrow again. So, Jordan, you've been a client of mine for a while. I called you. I said, do you know a good buyer's agent? You said, yep.
Because you called me
Michael.
after hours and thought something was wrong, so I answered.
With your own loan. No, all good.
That's how high performers work.
Yeah, we talk all the time.
It's phones
It's
are
not
Morning,
stop.
night. It should be
Saturday,
like that.
Sunday.
The deals don't stop.
I know, kill my life.
So then I said, yeah, I know a guy. I introduced you to Michael, and within, I think I called you 4 days later, and I said, how are you going with that? I wasn't working on that one at the time, and you said, yeah, it's done.
Yep.
We've signed. I said, what do you mean you've signed? He didn't even tell me that was that quick.
Yeah.
Do you want to tell everyone
Super
about the deal?
fast. Super fast. All right. So, you were running out of time.
Mention suburbs,
and
mention everything.
she put the pressure on me. She's like, this is the time I got left, and I'm looking at it going, well, okay. And you were very specific. You knew what you wanted. You were incredibly educated. So
Normally they're painful to deal with.
Sophisticated client, and I just pressure was on me. And I think I called you back. When was it?
First offer was 2 days later, and I didn't like it.
Yeah.
The first property, and then the second one was another 2 days later. So
There you
4
go.
days later.
So 4 days.
Yeah.
So 4 days we picked something up, and what did we pay?
$530.
$530, and there's a comparable on the market now at $589, and there's been multiple sold between that. So we
6
literally
weeks after settlement.
6 weeks after settlement.
60K in 6 weeks.
In 6 weeks. So 60K in 6 weeks. And when you think about that, a lot of people out there going, I don't want to pay a 15K buyer's agent. What they're essentially doing is they go and burn 3 months. You burn 3 months. We made 60K in 6 weeks. Now, if you think saving 15K, that's the Australian mindset. Let's touch on that. There's this false economy or this mindset about saving money. Saving money is not making money. They're two different things.
100%.
Making money is making money. It's like the LMI thing, right? Pay LMI. It's the cost of doing business. You buy more assets go up in value.
Tax deductible.
It makes sense. But everyone's like, I don't want to pay LMI. But for that, they won't get into
then,
the right property or a
they're
growth
sitting on
property.
the sidelines. So
They're sitting on the sidelines. And if you're sitting on the sidelines, you're ultimately going to lose. You're losing out. You're literally watching everyone else play the game. You're watching everyone succeed and you're missing out.
The first question I always get when I introduce a buyer's agent is,
what's the fee?
what's the fee?
Yeah.
What's the fee?
The people that call me and ask me the fee immediately, I'm like, oh,
They're not
Here
going
we
to.
go.
They're not going to pay
the
the
mindset.
fee.
That's immediately the wrong mindset.
Yeah.
It's not about
Agreed.
what you could do for me. It's like, what are you going to give me as a buyer's agent? What are you going to do for me?
And this is
Like, prove to me that the 15K is worth it and you're going to make me more than the 15K. But they don't ask it. They ask about saving the 15K. It's the mindset.
Exactly. You're spot on about saving money versus making. But the way I like to justify it is I may have paid you 15K, but I'm up 60, so I'm still up 45.
well, and you might not have been
In
up
6 weeks.
Yeah, and if you did it yourself, you still might not have anything.
Now, who can chuck 15,000 in a savings account and in 6 weeks make 45 grand off that?
Not possible.
What about shares?
Not
Highly
possible.
unlikely.
Very
right?
unlikely shares.
Shares. Don't give me started
Crypto,
on
you might be
shares.
down
Crypto,
60K.
you
Don't
might
even
be down 60K overnight.
Trust me, I know first-hand experience. Hope my wife isn't listening. So, yeah, Michael is 100% right. We explained the fee and straight away the mind wanders to that's a lot of money. But instead of taking a step back and, thinking, what can you guys do for me? Well, we're going to find you the property. We're going to introduce you to a broker. We're going to help you do the pest and build. We'll be there till settlement. We can read through the pest and build. We can do all these things for you. Like we're essentially like a one-stop shop. We deal with the agent. We deal with price reductions. We make sure that they're not lying to us.
Do the
with us.
negotiations.
Negotiations, everything. So in the end, you get this property and you've had to do very, very little.
Nothing.
And you're not overpaying. And people don't realize, they're like, we're so time poor and I've got sport with the kids and I've got work. Every hour you spend ringing an agent, sending an email to solicitor, if you work out what your hourly rate is, you're actually going to spend far more than what you would have using us. And it takes a lot of time, as you know, dealing with pest and build, dealing with solicitor, dealing with broker, dealing with the agent. And the agent's not a 5-minute job. They want your details, then they go back and negotiate. So if your time is $100 an hour, you have to calculate how long it's taken you to secure that property. Now, have you even secured that property at a good...
But a lot of times agents won't deal with them. You know how many times agents don't deal with me?
And
this happens so often.
I actually
This
want to
is
touch on that
perfect.
if you don't mind, because I've got a lot of people looking to buy in Perth. Everyone wants Perth, Brisbane, right? These are the two hot places. And I'm not kidding you. You see a place listed for sale in Perth, it's literally sold the next day.
8 days is the median
Or within
market.
48 hours, it's sold. Before you can even pick up the phone,
If you
you
scroll
might see
Perth, it just says under offer, under offer, under offer.
you could have it pop up in the morning and go, I'm interested. And by tomorrow, when you go to make the offer, it's already sold.
It's gone.
Okay, let's touch on that now. Let me touch on that. I, as a buyer's agent, don't open realestate.com. I might open realestate.com for a minute a week, 2 minutes a week. I literally don't use that platform for finding my deals. I don't. We did 88% off market for February, and then we did pre-market as well. We're the ones who buy it before it gets loaded up. So the ones you're talking about, they are pre-market and they've gone exclusively to somebody. So there's no point in looking.
But also
There's
what
literally
people...
the market's changed so much that realestate.com, it's not what it used to be in a regular market. You need contacts, you need an advantage. And if you don't have the advantage, you're ultimately going to lose.
And this is what people don't realise. And I've called previously before starting this career as a buyer, and it's hard to get information out of the agent and you don't get anything. And then when you call as a buyer's agent and magically the floodgates open up, they tell you what offers are on the property.
Yeah, everyone's going to be telling them that.
If
Everyone's
someone's
gonna
about,
lie, everyone's gonna say.
they tell you if they're about to die, if they're about to get divorced. So that's where the fee also comes in, because they know they can build that relationship with us. We're going to potentially purchase multiple properties in Perth. Whereas you as the buyer, you're going to purchase one and they will never hear from you again. So from a business sense, why would this real estate agent do business with Sydney with a person they're going to do one transaction with, or they might do multiple, they will do multiple transactions with us. So we build that relationship up. And like Michael is saying, then we start to get calls from them. Hey, we've got this one off market. Do you have anyone available?
That's where the sweet stuff starts coming in.
That's exactly right. So that's where we start to get the really good deals, like Michael said, before it goes to real estate, before it goes to domain. And that's where you can really start to build up your portfolio.
100%.
Tash, so question for you. So what are some of the things that investors are looking for? What advice would you provide to investors? And what should they consider when making decisions on how much they want to borrow, where they want to buy, getting obviously extra help from buyers agents or brokers?
Well, I'm talking to majority of my clients now are in the range of investment opposed to owner occupied. And some of the main things that I'm talking to people about are your borrowing capacity might be 800,000, and so they get really excited and they start looking for a property around 800,000. But if you want to build yourself up a portfolio, don't max yourself out in
you
the
can buy
first
two
purchase.
with 800.
That's exactly what I say. All three. So if your borrowing capacity is 800, try looking for 450, or 5.
Perfect.
Because then you're geared up to buy the next one pretty soon after that, within 6 months, within 12 months after that. Yeah.
100%. That's
So
fantastic advice.
from a broker standpoint, if you offer the client 800 and they take the 800, you probably won't hear from them for a while because they're borrowing
capacities unless they happen to get a nice fat pay rise, which doesn't happen, let's be honest. They're pretty much stumped. And when I tell people that, I really see the body language change. They take a step back and they go, oh yeah, you're actually right.
Yeah,
100% right.
This is what I've noticed with some of our customers. They'll come and say, I'm pre-approved for 700, so I want to buy it for 700. But we have to sort of educate them and say, we can buy multiple things for 700 and we can buy one for 350, 400 first, see what's happening. And then if an opportunity, because in this market, it's ever changing. When we get phone calls all the time, we've got this or we've got that. So if you spend all your 800, well, you're out of the game now. You're on the sidelines, like you said.
That's exactly
Whereas if you spend 350 or 400 and you still got 400 to go, and we ring you in a month's time, mate, we've just got this cracker deal. It's perfect for you. We can put you straight into it.
And you essentially you become the majority of Australians who only have that one or two. Because you put a hold on your borrowing capacity.
You get stuck at a certain point. A lot of people can't get past the second or third.
Can you just touch on that with the lending changes? Because I remember 5-6 years ago, I'd ring the bank and ask for money and I would just go buy a house the next day because that's how easy it was to borrow. And now it is, when I talk to you, you ask me for everything. Passport, license, my baby, like you want everything. What are the changes that you've seen in the industry the last couple of years with borrowing and borrowing capacity?
During those COVID years, those lockdown years, lending was never easier. You're looking at 1.99% interest rates. I think I might have fixed you for like 2.3% or something.
2.24.
Something like there you go, 2.24%.
Those are the good times.
Which is essentially 4% lower than what we can borrow now. So the average 1 to 1.5% will equate to about 100 grand in borrowing capacity. So you're 400K less
than what you could.
On
the same pay or in your same.
Exactly right. So that's where we're seeing a lot of people get stumped at the moment, is in regards to that. Okay. But the actual main couple of questions that I get is why pay LMI? And that's a really good one that I think we should touch.
Why?
For sure.
Why should we pay LMI?
Talk to us.
No one wants to pay
LMI.
LMI.
You're getting ripped, but like Michael says all the time.
LMI is the only...
What is it? What's LMI? The price of doing...
cost of doing business.
Cost of doing
business. It is. Look, I think LMI is never good on owner-occupied because you can't do anything. That's bad debt. You can't claim it back on tax. LMI on an investment property, it's tax deductible at the end of the day. The tenants are going to be paying that back with rent.
Great information for people because a lot of people don't know this. They just get told LMI and it's with this extra information, it puts your mind at ease and it doesn't block you from them buying.
Right. And look, and I'll put things into perspective with a real scenario, but LMI as well, you might pay 20K LMI because you have a 10% deposit, but if you wanted to save that 20% deposit, you'd need to save another 65 grand.
Great point.
How long is it going to take you to save 65
and then
grand?
In your case, the townhouse goes up 60 grand, well, now you've just lost
down
on
100 in 6 weeks.
Yeah, exactly right.
You can't save that money.
So how I've built my portfolio is with 10% deposits every time, and I bought one house every year for 3 years in a row.
Yeah.
Because I didn't max myself out of borrowing capacity, and I paid LMI. I was happy to do it.
Yes.
But yes, I may have paid LMI. The tenants have paid that back. I've claimed it back on tax anyway with depreciation and all that. Nice tax return. Happy days.
Yep.
But the properties have gone up 100, 150, 200K.
Yep. So you made money.
It
You've
was-
increased your net worth more than you could save. And this is all from a mortgage broker. This is the way a mortgage broker has structured her portfolio, and it's absolutely a testament to you. Playing the game with the tools at your disposal.
How can money
right?
make more money?
Correct.
Exactly.
And people get stuck at, I'm not paying $5,000 LMI. Well, cool.
That's that same
but now
mindset of the buyer's
you've just
agent.
missed out on hundreds of thousands of dollars
Quite literally.
in 2 years or
Yeah.
whatever over that $5,000 decision. So it's just, and this is what we're trying to do
mindset.
with this podcast. We're trying to unlock people's minds and give them the information so that it's not the misconceptions they had before listening to this is, I don't want to pay this because it doesn't make sense. Because now I'm going to pay it. I understand why I'm paying it. I can understand I can get it back on tax and I'm going to purchase that property.
You know what? I might just touch. I keep
Yes.
getting sparked with
God,
ideas.
this
I
is what
love
it's
it.
all about.
I love it. The difference between brokers and bankers, that's
Yes.
massive, right?
Wankers. Sorry.
Wanker bankers. I was one.
We'll cut that
9
out.
years.
Let's not cut that out. Bankers, wankers. It rhymes. We're not cutting it out.
Not all of us were wankers, just so
No.
you know, but most of them.
No,
are.
we had a good relationship.
Bankers don't pay LMI. I'll just let you know now. They work for the bank. They get their LMI waived, okay? Why would a first-time, second-time investor ask for advice from someone who's got no advice to give because they've never had that experience before?
So true.
Makes so much sense.
Wouldn't you rather go and speak to a qualified broker who has a good, healthy investment portfolio?
Yes.
Go and speak to a buyer's agent who's bought hundreds of properties. They know what they're talking about. So they're giving you that advice based on their personal experience, opposed to you going to a banker who only works for that one bank,
Yep.
never has paid LMI, probably hasn't even bought their own property yet because they're 22 years old and they've got a job as a lender.
That annoys me the most when I ring up and I've got to deal with someone who's telling me how it works, but they don't know how it works.
They
'Cause
don't
they haven't
know.
done it.
So let's look at back again to mindset, right? So people will walk into a heart surgeon's office. The heart surgeon will go, this is what you need to do. This is how we're going to do it, and that's it. And they'll just sit there and go, yep, yes, sir, right? But no one ever wants to learn from anyone else in any other industry that's done it. It's kind of like it depends on. It depends on authority, right? It's kind of like we've got this big certificate and everyone puts so much stock in the medical industry and it's like, that's what it is. Whereas no one's going to ask someone who buys plenty of houses, but, someone will go out there and say, my dad told me that, I need to buy in this area because it's a good street.
Yeah.
I like this about it. Oh, the carpet's not old or
Yeah.
I like the color.
Yeah.
Like they come up with such bad advice.
Is that the same
right?
dad that walked 10 kilometres in the snow to get to school?
Oh no, we're not opening that up. So for all the Balkan
I already
people,
know what
the
this
Balkan. So for all the Balkan people,
All the Balkan
we've all got the 10 to 20 kilometer snow story or dodging snakes.
shoes.
No shoes. I didn't have. Yeah.
And this
It's a
is
classic
like,
story.
just to go a little
God
bit
bless
sideways,
them. God bless them.
you can get in trouble listening to parents' advice. And
sure.
parents have good intentions, but
They do.
the reality is the world is a different place from the 80s and
Yes.
90s to now. A
Yep.
lot has changed. So you have to do your own research. And there's so many good things now, like with YouTube, and you can set meetings. Like there's free meetings if you want to talk to a broker or whatever, or an accountant. So you have to sort of level up, and the content is there. You've just got to be willing to do
we
it.
have so much content and education.
It's almost too
out
much
there.
content that people are like, oh.
The formula's there. It's just a matter of if you want to learn it, if you want to get ahead. And it's back to mindset. It all comes back to mindset.
Tash, so for people that are stuck with one of the big four and they're paying high loans, what advice would you give? I have multiple loans across multiple different banks
do.
now.
You do.
So is it
Which
easy?
is silly, by the way. We should probably bring them all to the one place.
You know a broker?
And I'll tell you why. Yeah, do I know a broker? I'll make a few calls.
What would you say to someone that's with one of the big four and they want to switch, but they think it's too much work and too much time? What's your
Look,
advice?
not necessarily saying that the big four are terrible. There is good offers and deals out there for people, but people get stuck on getting a loan and never checking their interest rate again, and they come back 3 years later and their interest rate is exponentially higher than someone who's just taken out a loan for a reason.
And the bank doesn't ring them to tell them that they're on a high interest rate.
Correct. So you
not
should
nice.
you should be contacting the bank proactively every 6 to 12 months to ask for a discount on your home loan. You might not always have that discount option available, but a lot of the time you do. When it comes to purchasing another property or looking at your borrowing capacity and you're a little bit stuck, often refinancing that loan to another bank can help extend that borrowing capacity because yes, number one, you're extending your loan back out to 30 years. which reduces your repayments, but also you might be getting a better interest rate as well.
Improving your serviceability.
It does improve your serviceability.
It does?
Yeah, yeah.
Oh, that's fantastic.
And you're doing interest only?
Am I?
Yes, I believe you are.
You're my broker. You should
Yeah,
know.
I believe you are.
Yes, I am doing interest only.
It's a
Do
particular.
you want to touch on that between the P&I and the interest only benefits?
Yeah. Look, I think if you've received the advice from an accountant and that is a strategy that you're looking at utilising, then that can work well for you. But for the average Australian, what I'm seeing is a lot of people want to come and get interest only because they're not affording their principal and interest repayments, and that's where it's no good.
When it's $6,000 a month in repayments, principal interest.
Because you're not actually reducing the balance on your loan. So when your interest only expires, you're now 2 years less with your loan term, but your repayments are exponentially higher because the balance hasn't gone down.
Yeah.
Whereas if you're an investor and you want to be quite bullish and aggressive with your portfolio and you want to buy something every 6 to 12 months and you do interest only, that is a particular tactic that I see a lot of investors using because they're not actually putting too much of their own cash towards
That's how I've done
mortgage.
it. So you've done the same.
And it's a good buy and sell strategy, but it's not great long term.
Yeah. Fantastic advice, Tash. Thank you so much. Really good to see you.
We will
great
have
advice.
Tash's details on our Instagram page for anyone that wants to reach out.
Capital Finance and Mortgages.
Shout out to Capital Finance. Represent.
Nice.
Thanks, Tash.
you so
Thanks
much.
for having me.